Hello guys, Steven Dexter. Welcome to this video. So it's been about a month and a half, and I want to do a recap with all the tickers that ran in the last 2 weeks. And we definitely got some interesting plays, so make sure pay attention to some of the things that I found out, that I discovered for some of the pattern changes. Before I start this video, make sure to click the like button and subscribe. Let's get into it. So starting at end of July to, well, of course we're not in end of September yet, but overall I've made about 300, close to 325,000. And there's some tickers that I want to cover. First of all is QH. This one you can actually push into size because it has traded sufficient enough volume. So on September 11th, we had a massive gap down from 4 to 3, almost to 1.7, so faded about 50% of its gain. So it had a small push. I did a small size into here. For these type of play, you should swing for a few days to get the best reward. You can see in a few days it faded to $1. But the reason why I don't like it and I didn't push in the size because it's under $3 stock, and even though it traded 300 million shares on the previous day, but it's on 70 cents stock, so there's not much money that was actually traded in this ticker. 300 million share trading at 70 cents, that's about 200 million, 300 million-ish dollar being traded on that day, so not very ideal. But of course you can definitely sizing about, let's say you don't want to risk, the risk is pretty wide, so maybe sizing up to 30k, 50k shares to gain 20k, 30k reward. If you decide to swing, it might be a little bit better. So that's for QH. Made about 40k, 50k on this one. Overall, not a good ticker to push into a significant amount of size, but much better than TIL. So this one looks like a pump and dump chart, and it went from basically 13, 14 into 100. Almost $193. If you go into the intraday chart, it had a massive gap down and it had its push into the 75-ish. So I took a decent short into, I think it's once the breakdown happened, I think it's in 68, 69-ish. Didn't write it and because I wasn't very comfortable. You only traded about 1 million shares throughout the day, and the minimum requirement for daily volume needs to be 4 million. So you need to trade the same amount of shares as the previous day, and also the amount of dollar traded is not sufficient as well. So typically you want to see at least $150 million being traded in that day. So it traded about 1.8 times 75, so that's barely 150 million. Going into the second day, gap down a little, then you can see it didn't drop that much and still holding to the 66-ish. So whenever we are shorting into a massive multi-day honors, the ticker needs to trade sufficient enough volume. That's number one. Number two, it needs to gain enough percentages above the initial support level. If you are lacking either of those criteria, then the pattern is not likely to work, and it's very liquid, so it's very easy to get stuck into it if you decide to place a swing short into these type of low liquidity tickers.
Interested in trading like Steven Dux? It all starts with choosing the right broker. Dux Trading has partnered with Success Trader to supercharge your trading journey. By joining through Dux Trading, you can unlock 90 days commission-free trading at Success Trader. Experience trading like never before with superior short inventory with over 10 built-in locate sources, dedicated phone and chat support, early locate availability, and the opportunity to earn interest on any of your idle funds. Plus, enjoy competitive locate pricing that suits your trading style. Ready to elevate your trading? Simply click the link in the description below to get started. Now, let's dive back into the content.
Alright, so another interesting one will have GSIW. The last time I remember, it was LUNR. It did basically an insider selling, going down 99%. This one is a little bit difficult to catch. It's formed the overstaying gap down pattern in gap down from the previous day, then didn't even try to push. It traded 70 million shares on previous day, then just keep going down. And personally I think there's no way to size into this because on each candle, on 2-minute chart candle, you only traded 250k shares. That's the highest one. Of course, if you size A, you want to consider where your risk is. There's no such thing as a risk because pre-market bonds pretty low, then previous day close, it's a parabolic squeeze. So there's no actual consolidations for you to risk. Overall into this, maybe potentially sizing small amount of shares going to the open using overstaying gap down pattern, risking the $10 and potentially add into the push. But to be able to get into full size on GSIW, it's not very viable unless you decide to take a massive risk. I did notice somebody selling because typically when ticker goes into support and if still the level 2 appears to be a massive selling orders, then there's likely a chance that ticker will continue to go down. But that's not something that you want to base off to place a trade. Not very ideal. Overall this month, we have a lot of biotechs and very low flow tickers like a BNZI, like a 700k float, biotechs with very low flow as well. I would highly suggest if you're a beginner or if you are trading maybe in your first 2 to 3 years, I would highly suggest to avoid those tickers because generally, you're likely to gonna take a loss on that, and borrow fees tends to be very expensive. So it's lose-lose situations. So that's something that I want to suggest. If you have any questions, make sure to leave some comments below, and we'll be happy to answer. And that'll be it. All right, guys. Thank you very much for watching this video. Overall, August, July, September tends to be very slow. We should start to get into hot seasons into October, November, and December, and those seasons tends to be the hottest for penny stocks. That'll be it. Thank you very much for watching. I'll see you guys in the next one.